Hello, welcome back to our channel, Buffalo First Wealth Management with Alan Dembski and Juliana Janson. We're trying a new little setup today, so hopefully you like it. But we have a great topic. Today we're going to be talking about home buying pitfalls and some tips to go along with that. It is spring, and I think talking to some realtor clients of ours, people seem to be in the mood to start to look for a new house upgrade or move or whatever they might do. So that's why we thought we'd come up with this topic today. So we're going to do a little bit different. We're going to kind of go back and forth here. I'm going to ask Juliana some questions and we'll go from there. I guess the first question would be, when looking to buy a house, would be, how much should I spend, or how much of my monthly budget should I use to put a down payment on a house? Or to buy a house.
And probably one of the most important questions that you can ask, basically. And, anybody that's been watching our videos knows that a lot of the answers to the questions are, it depends, but you certainly can take into account some of the main variables that go into the equation of answering that question for you specifically. And, a lot of it has to do with, how much cash do you have? What is your income? What is your income projected to be in the future? Is it, are you thinking it's going to rise rapidly? Is it going to stay pretty stable depending on the field that you're in? But in general, the rule of thumb that we like to tell our clients is, you really kind of want to keep it to no more than 30% of your gross income. This is going to give you some breathing room so that you don't become house poor, which no one wants to do, especially when they have their eyes on a lot of cool things to fill their house with.
The house poor is probably one of the more common things that we come across when we're doing financial planning for clients. Is, I don't have much money because of my house going forward. So how much should I put down then? If 30% is my monthly budget, should be going towards my house, then how much should I put down? How much should I write that check for if I'm looking for a new house?
So depending on the cash that's on hand and depending on, what your spending requirements are for your monthly budget, we typically like to, if possible, recommend that people put at least 20% down. And the reason the 20% down is a number that we focus on is because that is the number that determines whether or not you have to pay private mortgage insurance. And private mortgage insurance is something that's required by the bank if you put less than 20% down on your home. So if you don't have 20%, that's not the end of the world. You can go back to the bank after you have equity in your home to get that, so you don't have to pay it forever for your entire mortgage. But it is something that's a nice expense not to have to pay when you first buy the house.
Right, because it is a percentage of the value of your house, and it could be pretty costly if you're spending $500,000 on a house. Depending on the bank and some interest rates and things like that, could really add to your monthly budget there, just having private mortgage insurance. So that's a really good one. What are some extra costs that people generally don't think about when they're looking for that nice new house?
Yeah, I think this is probably one of the biggest surprises that new homeowners, and even sometimes when you're upgrading your home, you don't realize, or you don't remember in all cases, all the costs that come up. I remember when we first bought our house, we were going to the store on a weekly basis, buying everything from rakes to snow blowers to, lawnmowers. And, it's those expenses. Some of them are nice to have, like new furniture. Some of them are need to have. If you've got a yard, you need to buy that stuff. If you have a driveway in Buffalo or in the Northeast, you definitely need to have something to remove the snow. So some of these expenses can be quite pricey and can really surprise homeowners when they're dealing with a new, maybe bigger than they wanted it to be, mortgage, and real estate taxes and the insurance on the home. To have these additional costs definitely puts a strain on the budget, especially while you're getting used to the new payments.
Yeah, and a funny story is, I was working with a client and they were looking for a house to live in an apartment. They got furniture maybe 4 or 5 years ago. And I said, one of the things you want to look at is, budgeting in for new furniture. Oh, no, it's fine. It's brand, we only had it a few years. It's going to be fine. And sure enough, they got into the house and bought new furniture because bigger space, filled up the area a little bit more.
I think the other thing that comes up too is even if you have the house inspected, even if you have a pretty good idea of the shape that it's in, it's really not uncommon to have pretty large repair bills from some sort of, whether it's a roof or whether it's, an appliance that you thought you had covered, but the appliance broke down. So especially in that first year when you're assessing the state of the house, those definitely can crimp your budget.
Yeah, and it's also like selling a house too. Another client story is they want to sell the house, but then they want to paint everything. It's like, why are you going to paint? Everyone that comes in is probably going to repaint it anyway. So keep it the same and let them decide what colors they want in the house, because chances are what you like, somebody else doesn't like that's buying your house.
Unless it's a terrible color. And then sometimes it doesn't.
I have seen some pink bathtubs.
You can't be sold when it's that color.
The old 1970 green bathtub. So what are some of the things that the banks look for when people come in and say, hey, I want to buy a house?
So, we work with our clients on a regular basis with their credit rating. So credit rating is essential. We really stress, we're big on automating, not only automating savings, but automating the payments on all of your bills. As anything that can be automated, we recommend automating, because that's going to make sure that your payment history is solid and that you have a long history of paying bills on time. But they're also going to look at your credit usage. So we had a client that was looking for a home, and basically, they knew, they had an idea of what they were looking for, and they found the perfect bedroom set that they were going to purchase. And we said, whoa, no big purchases before that mortgage goes through, because you can actually be declined if your usage on your credit is too high and the bank deems it not being a good risk. So hold off on that until you've actually closed on the mortgage.
Debt to income financing there. So I can't go out and buy that Mercedes before I close on my brand new house.
No, definitely not that.
Should I use cash or finance the house? Some people say, hey, I got an all cash offer, or I'm coming in with all cash, or should I finance? What are some things to think about when financing or using cash?
Yeah, and a lot of people don't have the choice. They have to finance. Certainly, that's the case a lot of times when you're just starting out. But that becomes a decision that needs to be looked at as a whole in terms of your financial picture. The one thing that we caution people against, and this goes back to the 30% of your gross income, is you don't want to get into a point where you don't have any cash for expenditures. Right. You don't want to have to take out more loans to do a repair on your home because you left yourself too short. So the amount that you finance really depends on your total financial picture and the amount of cash that you have in order to fund expenses that are going to come down the line.
Yeah, one of the financial planning things that we talk to clients about is emergency accounts. And if you use all your money on a house, again, those big purchases, well, the roof looks fine today, but that snowstorm comes and rips a hole in it and we got water damage or whatever it might be, we're going to have some cash on the sidelines too.
Yeah.
And historical interest rates are still low, comparably speaking. If anyone bought houses in the 80s at the double-digit interest rates,
90s,
and then we had some lower interest rates in the 2020, like late teens, low interest rates. But again, I think buying a house, sometimes it's very emotional, but sometimes you got to be practical as well.
Yeah, definitely. And I think you just need to take everything into account to see what's best for you. Sometimes you don't have a choice. Sometimes, if you run out of space or you have to move for a job or, other factors, getting divorced, getting married, you have to buy a home. So that all gets taken into account. And eventually interest rates will come down. We think. Nobody really knows, but you can always refinance if the rates do come down.
And I think that's the biggest thing is people tend to forget, well, interest rates, oh my God, they're at 6.5% or 7% for a new house. Well, if they do go down, you can refinance again as long as there's some stipulations and all that, but check with your banker, your lender to see how much of a recapture you have and things of that nature. But certainly there's always opportunity out there. Anything else you want to add?
No, I think the last thing too that isn't always talked about is sometimes buying a home isn't the right thing. I mean, it's a great investment, and it's certainly part of the American dream, and a lot of clients have that as a goal, but it's not necessarily the best move for everyone. So
Right.
you kind of need to take that into account to see, is this the right time for me to purchase a home based on everything else going on in my life?
Yeah, and that's a really good point. You just popped something in my head about renting. If I want to leave the area in 5 years, why would I buy a house? Yeah, I might have some equity. That's fine. But I might have some up in the market too that I can have put that money aside and save for my move or whatever it might be. So if it's short term and residential living, sometimes renting is better on the short term. So thank you very much. Make sure you like and follow on YouTube and our social media channels, Facebook and Instagram. And, give us a call if you have any additional questions or if you want to leave a comment. Certainly, we're open-minded to hear your thoughts about buying a house. Thank you, and we'll see you next time.